One of the best places to start investing in the US stock market could be the Mag 7. But here's where it gets interesting. One Mag 7 company is trading at around 186 times forward PE, while another is trading at just around 20 times. And Wall Street analysts are bullish on both. So how do you know which one is actually the better buy today? If you're new to investing, here's one quick thing. In general, the lower the forward PE, the cheaper the stock is trading today. And that can mean a better buying opportunity. In today's video, I'm ranking the Magnificent 7 from 7 to 1 to find the best buy today. These are all incredible companies and strong long-term investments. Stay with me until number 1 because the company at the top isn't just growing faster than every other company on this list. Its valuation is also much more reasonable than you might expect. The 7th company on my list today is Tesla. Ticker symbol TSLA. Tesla may be the hardest company on this entire list to value using traditional numbers. Because you're no longer simply buying an electric car company. You're also investing in autonomous driving, Optimus, and AI businesses that could have a huge impact on Tesla's future if they execute well. Now let's look at the numbers. Analysts expect Tesla's revenue to grow by roughly 11.6% this year. Its forward PE is around 186, and Wall Street is very divided. Of the latest 47 analyst ratings, 23 are buy or strong buy, 18 are hold, and 6 are sell or strong sell. The overall consensus is still buy. My take? Tesla is an incredible company with huge long-term potential. But for this ranking, which focuses on growth versus valuation, I think there are stronger opportunities within the Magnificent 7 right now. So Tesla lands at number 7. The 6th company on my list today is Apple. Ticker symbol AAPL. Apple is one of the highest quality businesses in the world. But quality alone doesn't always make a stock the best investment. Now let's look at Apple's numbers. Expected revenue growth is roughly 14.7%. The forward PE is around 35. And among the latest 46 analyst ratings, 27 are buy or strong buy, 14 are hold, and 5 are sell or strong sell. The overall consensus is buy. My take, Apple is a world-class company. But at this price, I'm not as excited about it compared to some of the others. So for this ranking, I'm placing Apple at number 6. The 5th company on my list today is Microsoft, ticker symbol MSFT. Microsoft gives investors something they've been waiting to see from AI, actual monetization. Its AI business has now surpassed $100 billion in annual revenue, while Microsoft 365 Copilot has crossed 30 million paid seats. Now look at the valuation. Expected revenue growth is roughly 17.9%. The forward PE is around 26, and Wall Street is overwhelmingly positive. Of 56 analyst ratings, 53 are buy or strong buy. Just 3 are hold, and none are sell. The consensus is strong buy. That is a much more attractive equation for me. I'm getting stronger expected growth than Apple, a lower valuation, and a business already monetizing AI at enormous scale. My take? Microsoft is a phenomenal business, but at this price, it lands at number 5 for me. The 4th company on my list today is Amazon, ticker symbol AMZN. Amazon says its AWSAI business has crossed a $25 billion annual run rate, and its chips business has too, both growing at triple-digit rates. That's real momentum. Now look at the numbers. Expected revenue growth is roughly 15.5%. The forward PE is around 22. And Wall Street is extremely bullish. Of the latest 60 analyst ratings, 58 are buy or strong buy. Only 2 are hold and none are sell. The consensus is strong buy. Now compare that valuation with Apple. Amazon is trading at a substantially lower forward multiple with strong expected growth and almost unanimous analyst support. My take? Amazon's AI momentum especially inside AWS, gives me confidence there's still meaningful upside ahead. That earns Amazon the number 4 spot. Now let's move into the top 3, where growth and valuation come together in a really compelling way. The third company on my list today is Meta, ticker symbol META. AI is already strengthening Meta's advertising business. Revenue grew 28% last quarter. Now look at this combination. Expected revenue growth is roughly 26.6%. The forward PE is only around 19. And in the latest analyst trend, 55 ratings are buy or strong buy, 7 are hold, and none are sell. The consensus is strong buy. Now compare that with Apple for a moment. Meta's expected growth is substantially higher, yet the forward valuation is dramatically lower. That's exactly the kind of mismatch I'm looking for in this ranking. My take, Meta's growth is strong. The valuation is reasonable, and AI is already helping the business. That puts Meta at number 3. The second company on my list today is Alphabet, ticker symbol GOOGL. Google is proving it's a serious AI contender. Google Cloud grew 82% last quarter, and nearly 90% of the Fortune 100 now use Gemini Enterprise. Now look at Alphabet's valuation. Expected revenue growth is roughly 23.6%. The forward PE is only around 17. And of 64 analyst ratings, 58 are buy or strong buy, 6 are hold, and none are sell. This is what really stands out to me. Growth above 20% with the forward PE below 20. That's hard to ignore within the Magnificent 7. My take, strong growth, reasonable valuation, a dominant advertising business, and real AI momentum across Gemini and Google Cloud. That puts Alphabet at number 2. So what beats it? One company is expected to grow more than 3 times faster than Alphabet without trading at anything close to 3 times the valuation. And that brings me to number 1. And the number 1 company on my list today is NVIDIA, ticker symbol NVDA. Even after Blackwell, NVIDIA isn't standing still. Its next generation Vera Rubin platform is already ramping up, and NVIDIA says it can handle up to 10 times more AI work at scale than the previous generation. Expected revenue growth is roughly 82.4%, with a forward PE around 24. The analyst consensus is strong buy, and this is what really stands out to me. NVIDIA's growth is in a completely different league, yet it's still trading at a forward PE in the mid-20s. That's a rare combination. My take? This is why NVIDIA comes out number 1 for me. You're getting extraordinary growth without paying an extraordinary valuation. Just compare it with Apple. Apple is expected to grow around 15%, yet trades at a higher forward PE than NVIDIA, which is expected to grow more than 80%. That's very difficult to ignore. Of course, expectations are already extremely high, but based on the numbers today, NVIDIA takes my number 1 spot. So here's my Magnificent 7 ranking based on growth versus valuation. Number 7, Tesla. Number 6, Apple. Number 5, Microsoft. Number 4, Amazon. Number 3, Meta. Number 2, Alphabet. And number 1, NVIDIA. But here's the bigger takeaway. Every company on this list is enormous, and they're all very different businesses. So simply asking, is this a great company, isn't enough. I also want to know, how much am I paying for the growth I'm actually getting? Because a great company and a great stock at today's price are not always the same thing. So what do you think about this ranking? Tell me in the comments below. This video is for educational purposes only. So please do your own research. And as always, invest smarter, think global.